Hello, good morning, Glenda. Good morning, everyone. So today I want to discuss the overall trends and the current issues within the telecommunication infrastructure in Indonesia. So let me begin with the recent industry update. So there are three main points that I want to highlight today. So first, I want to emphasize that the core business of power leasing revenue has been sluggish. So this is primarily due to the merger of IOH and 3 Hutchison, which was completed in early 2022. So typically, when two telecommunication companies merge, it impacts the power leasing business as part of the consolidation. So this trend has continued into 2024, specifically Tower and the Big, which had high revenue dependence on these two companies before the merger, have seen a slight decline in tower leasing revenue since 2023. But interestingly, Mitratel, which had a lower dependence, has continued to show a steady upward trend benefiting from the situation. Next. So this trend can also be observed in the number of tenants for each player. So since 2022, Tower and Debic has shown a flat trend in the number of trends, and our analysis of past merger cases indicates that this flat trend generally lasts for about 2 to 3 years post to the merger. Okay, next. Okay, secondly, the growth in fiber optic business revenue has become more pronounced. So as mentioned earlier, telecommunication infrastructure companies, except for Mitratel, are experiencing sluggish tower raising revenue. Nevertheless, they are showing healthy growth annually because the growth in fiber optic business revenue is driving the overall revenue growth. So the fiber optic revenue across the industry has been recording high growth rates every quarter. So for example, in first quarter 2024, Mitratel, Tower, and the Big recorded around 150%, 44%, 203.8% growth in fiber optic revenues, respectively. Okay, next. So therefore, in summary, telecommunication infrastructure companies are still posting positive results in 2024, while core tower leasing revenue is somewhat sluggish. The diversification into the fiber optic business is driving overall revenue growth, which showed a continued positive outlook. So we project mid to high single-digit revenue growth for the sector in 2024. This growth outlook is supported by their first quarter 2024 performance, where Mitratel, Tower, and Civic recorded revenue growth of 7.3%, 6.4%, and 5.4% respectively. Okay, next. However, the stock prices of these companies do not reflect this positive performance. I think this is due to the widespread negative sentiment within the sector. So let's explore the factors contributing to this negative sentiment. So firstly, the potential merger between XO and FRAN, I think, is a major concern right now. So as previously mentioned, mergers between telecommunication players generally lead to a temporary dip in revenue for telco infrastructure companies. So the ongoing discussions about a merger between XO and FRAN are raising concerns about another potential hit to the sector, particularly for Tower and Civic, which has significant revenue dependence on XO and FRAN. A merger could impact their revenue further. However, the silver lining is that telco infrastructure companies are seeing increased non-tower revenue driven by the fiber optic business, which could partially offset this impact. Okay, next. Okay, secondly, the prolonged high interest rate environment is another concern. The beginning of this year, it was anticipated that the interest rate led by US would be cut quickly. However, with inflation not subsiding as expected, interest rates have not been reduced yet. Consequently, despite Indonesia's CPI having reached the target, interest rates have not been lowered. So this prolonged high interest rate environment is particularly detrimental to capital-intensive sectors like telecommunication infrastructure. So this is another reason why the telco infrastructure is showing a sluggish performance in terms of stock price. Okay, next. Okay, lastly, there is a concern over Starlink's entry into the Indonesian market. So Starlink recently launched its service in Indonesia, providing internet services, which has raised concerns about the future demand for the fiber optic cables. However, we believe Starlink will serve as a complementary service, catering to areas where fiber optic infrastructure is challenging to implement. So essentially, Starlink cannot entirely replace the needed infrastructure in Indonesia, so we don't see it as a major threat. Okay, next. So in conclusion, while we maintain a positive long-term outlook for the sector, but we have decided to downgrade our rating to neutral, considering the prevailing negative sentiment and ongoing issues. However, if interest rates start to decline in the second half of the year, it could possibly impact stock prices. And our top pick remains Mirae on the sector. Okay, thank you. Back to you, Memba.